All right, 9:30 is about to open up. We're in this little downtrend right here, so I'm looking for shorts. 9:30 is about to open. Oh, big candle. I'm going short on this candle. I'm under the EMA. The books tell me that's good, so I'm going to put my stop up about maybe like right here. Minimum. I'm not allowed to do any less than that. I'm not allowed to manage it whatsoever. It needs to go there. Here it comes. That's looking pretty good. Hold on. Why is that? Okay, we're still below the EMA, though. That's okay. Okay, I'm getting a little close to my stop, so I'm just going to widen this a little bit, right? We're just retesting the EMA. Nothing to worry about. Okay, I'm going to average in. There's no way it can go up from here. There's no way. Why is it? Oh, my gosh. I just blew my account. I just blew it. Trading the New York Open is by far the most lucrative time of day to trade, and I'm going to show you exactly why and how right now. The course of a day, over the course of a week, or over the course of a session, the market will build up institutional order flow or trap volume in an area of the chart, making you believe that the market is going to continue in a direction, and then it will shift very aggressively away from that area. Specifically, they will do this at 9:30. Usually, or a lot of times, there will be a series of traps leading up to 9:30 in which they get you to do something at an area of the chart, committing your own liquidity, so that larger institutions, market maker, whatever you'd like to call them, can actually go and benefit from you being induced into the market. In this example up here, you can see the institutional order flow has been built up over the course of an entire day. Asia, London, New York, perceived trend in the upwards direction, making higher highs and higher lows. And you can see these big up close candles leading people into the high of the day, forcing them to buy up high. Then, right at 9:30, right on cue, big candles back down, taking out an entire day's worth of order flow in 15 to 45 minutes. Additionally, sometimes you'll get these directional moves in which they will start slamming candles back down as they are climbing, which lets me know they are trapping shorts, eventually going vertical, leaving those shorts behind, blowing out their accounts if you are averaging into those trades. That is trap volume, but it's more of a dynamic trap volume where they are continuing to trap in a direction, squeezing out those shorts before going vertical. And of course, that can be in the opposite direction as well, where there will be a downwards channel and they are trapping longs within that channel. That is all very important behavior that I'm searching for. But my question to you is, if you know that this behavior is going to take place at or around 9:30, why would you trade before then? I am looking to start doing live trading on YouTube. Let me know in the comments below if you'd like to see me do some live trading here on YouTube. And if this video can get up to 1,000 likes, I will do it. Here we go, step by step. How to not only analyze, but what to look for, leading up from big picture all the way down to the little picture. Starting off with big picture, how do I do my analysis? What is my process for getting down to 9:30 or up to 9:30? What takes place before then to prepare me for that trade? It's very simple. I think it's simple. I promise you it is. Just a little bit of practice. Technical analysis. Most people have some really long, complicated version of technical analysis. This one is very simple. I'm looking at market structure on the 15-minute chart. I'm looking for signal days. I'm looking for the opening range for the week, the high and low of Monday, projected across all the way through Friday, and looking for weekly template setups based off of that behavior. I have videos on my channel that explains all of those setups in detail in the weekly templates. Find other traders' stops. Now, this is a bit of an optional, but I like to know why the market is doing what it's doing. What is it reaching for? What is it searching for? Who is in profit? And who is the market currently trying to punish? Inside bar trader stops on the daily chart. Whenever there's an inside bar on the daily chart and they trigger one side of that market, that puts stops at the other end of the range. For example, let's say that this day, I know it's not, but let's just say it was. Let's just say that this was an inside day and they triggered the high of the previous day. I would automatically assume that there are now stop loss orders down at the previous day's low. That could give me a trading setup idea on the following day. Additionally, breakout trader stops. So same area of the chart over here. Notice how the breakout from previous day's high was very clean and they never came back down to retest it. I can project that across as an area where the market tends to come back to stop out anybody who was trading the breakout of that daily high. And also searching for engineered liquidity. Areas of the chart where they have created a level and then left space down below that level, basically creating money down there. It's a price to level gap is what I call it. This is the same exact chart from the last slide, except we're going to read it from left to right. We're still on the big picture, but I want to break it down, the thought process that goes into this. From left to right, we have day 1 of breakouts, day 2 of breakouts, day 3 of breakouts, 4 and 5. At a minimum, I want to see at least 3 days of breakouts. That is the signal day to start searching for a sell high opportunity if the market is going in that direction. So after at least 3 days of breakouts in the market, we have a day that has gone up, created a low, they went higher, so that confirms that low, and on the following day they attempt to go higher and then break structure to the downside, making that lower low. Additionally, we have an opening for the day. They attempt to go higher, and then they close below that opening for the day, which indicates a first red day, which is also a signal day, which is in really good combination with those 3 days of breakouts, indicating to me that on the following day, on this Thursday, I should be looking for a sell high setup. What does sell high mean? High of session, high of day, high of week. Those are the areas of the chart that I want to be looking at. Okay, so now that we have our big picture, that was all the analysis that is done the day prior to me looking for the trade. Now we're going to talk about what do I look for on the day of the trade itself, still on the 15-minute chart. We already have that break-in structure to the downside, which is good. That's what I have to see, or I want to see for this kind of setup. Coming into over here, which is leading into my session, you have the London session. I trade New York. We're talking about the New York Open. I'm marking off the previous session high and low, as well as the gap time high and low. Now, if they are very close, I'll just do whichever one is more extreme. So like, for example, London's high and the gap time high is very close together. I'm just going to take the gap time high because it's very close, but it is a little bit higher. And I always want to be trading from the absolute extremes. So I've got those levels marked off here in black. And then I want to mark off my first hour high and low as well. So the first hour over here, this is the 8:45 candle, has gone a little bit higher. So I don't necessarily have to mark this off because, you know, it is very close to the gap time high. So if you want to just leave the gap time high there, that's okay. But for this example, I do have it marked off. Now, the gap time, or the first hour low, is pretty much perfectly in alignment with London's low, so I've just left that line there black. And then also making sure, remember in the last slide, I talked about what is sell high, looking at the previous day's high, that is a sell high opportunity. You want to make sure that you're still watching this level and aware that they have left space between price and that level. They could go vertical through that level before getting that sell high setup, so you do have to be careful. But that is all valuable, important information that I'm looking at leading into not only my session, but also into 9:30 to try and decide what kind of trade I'm going to take or if one is even presenting. Also, one last note to look for, the daily open or yesterday's close. Notice how the yesterday's close / today's open, there's a lot of volume built up on top of that. They have been slamming candles back up there over and over and over again. So if they were to maybe go back down below that, all of these people up here might be stuck where their stop's going to be. They're going to be down here, or maybe even down here or down here. Same chart from the last slide, just blowing up a bit so that we can talk about all of the details again. I don't want to go too fast. I want to make sure that everyone is catching on to everything because it is very important. Details matter for every single trade that you take. So on Wednesday and Tuesday over here, we had Tuesday being that big pump day that you remember seeing from the last slide and also the bigger picture of the chart. Then we have the break-in structure and the market closes right here below that daily open. They attempted to go higher on this day as well, which is good. That's exactly what I'd like to see. And then on this day right here, like I said, all the volume kind of built up on top of the daily open. I've got my levels marked off. I've got the first hour high and low, the gap time high and low, the level to watch as well. And I also have this low marked down here as a place where the market might go back to. There's space for this to be filled, and we also have space from this level down as well. If the market were to build up order flow and then aggressively shift down, it would very rapidly collect all of that money. Okay, great. So we've talked about big picture. How do I do on my analysis? What am I looking for in my analysis? And then looking at not only the big picture for the entire week, or maybe over the course of a week and a half or so, but also looking at the day itself. What levels am I marking off? Why am I marking those levels off? It all comes back to the market only does three things: breakout trend, breakout reverse, or stay inside of a trading range. And if it's in a trading range, I'm not really interested. I'm looking for one of the other two behaviors: breakout trend or breakout and reverse. Now that we've talked about the big picture for the week, as well as the big picture for the day, we're slowly narrowing it down into 9:30. Coming down to the little picture, coming down to that 1 minute chart we already have in the back of our brains, had that break-in structure on the 15-minute chart to the downside. I am looking for a sell high opportunity. We already know about which levels those are. previous day's high, high of session, high of day, and high of week. So now that we're down on this 1 minute chart, I need to look for a few things. Levels. Has the 1 minute chart gone to any of those levels? We have the first hour high and low. Yes, they have gone outside of the first hour high. Timing, I have to be after 9:30. It has to be after 9:30 because of what we talked about in the earlier portions of this video. I don't want to be a part of the order flow that's going to be manipulated. I want to be a part of the market where they're moving through all those people being manipulated so I can make money and they can lose, which kind of sounds really cynical, but unfortunately, that's how it has to be in trading. I'm paying very close attention to structure now on the 1 minute chart. I already have my structure on the 15-minute chart. We've already identified it. Now all I have to do is watch the 1 minute chart and watch it go from, since I'm trying to sell high, I need to watch it go from an uptrend and turn into a downtrend. What in the world does that mean? If we're making higher highs and higher lows, I need to see them make a lower low. Now that we have that break-in structure to the downside, I need to see 3 pushes back up into the high. That 3 pushes should be some kind of market maker behavior. I want to see them manipulate the heck out of everyone who is on the long side of the market at this point. So notice how the candles come down, they go into consolidation, and then how do they come out of that consolidation? Big candles up, then a pause candle, which is a little bit hard to see. I do apologize. Then we get some more big candles up, and then another pause candle that's kind of hard to see because of my boxes and me trying to highlight. Is what it is. Then we have the third big candle up right here. So my thought process whenever we're getting this kind of behavior. The first push gets my attention. If it gets my attention, it gets everyone else's attention as well. And then the second push, because human beings are human beings, we need extra confirmation. That is the area of the chart that I will look at on the second push for traders to be induced into the market. This is where I believe that people are buying max, right? So this is the largest area of the chart where people should be buying. And then the third push is where they probably, if they didn't act on the second push, they bought now at the absolute worst part of the chart, and I look for behaviors immediately after that that would signify to me that that is true. So in this example here, you can see that they did those 3 pushes and then they immediately engulfed those candles. How did they engulf those candles? Well, people are buying the close of strong up close candles, which means that all of the volume is being contained at the close of those candles. So if I bought any of these candles, that one down close candle right there, I am now underwater, and I'm looking for behaviors of them not allowing those people to get back out of their positions or not get into any profits. So if I were to take my first entry short here, and then it starts to confirm, maybe adding in a bit more, whatever it may be. However, as long as they don't let those people out, I'm safe. And that is also how I place my stop loss effectively. Instead of using a 50 pip stop loss and putting it all the way up here, if I'm of the belief that they have done all of their work, where after 9:30 they've manipulated everybody, I'm not going to use a huge stop loss. I'm going to put it in an area where I believe that the traders are trapped, because that's where I believe they're going to go back up to. So there's no point in having a larger stop. That gets my risk to reward better. And then I just manage the trade from there at certain areas of the chart. Over here on the left, just making sure that I'm being thorough. Again, levels, timing after 9:30. 1 minute chart needs to have been pumping before I take my entry. Entry criteria, which I've already gone over, but having that break-in structure, 3 pushes back up into the high. A chart pattern, so an M or a W. Up, down candle, which was a pause. Up, down. Down. That's going to create an M, and then that's going to be my entry every single time. Additional market maker behavior. These are things that I'm looking for to give me added confidence. Inducement candles, which we have, huge candles leading us into the high, big candles leading us into the high, and then of course, seeing that behavior on the 15-minute chart, you can mark off areas from there as well to see where people might be stuck on a higher time frame. And then time engulfments, looking for certain times of the day, specifically around 9:30, I'll always mark that candle off, because they will do a 3 push pattern outside of the open of that 9:30 candle, and you really have to be careful of reversals when they blow through that 9:30 time. If they do a 3 push pattern, let's say in the downwards direction, 9:30 opens up, push 1, push 2, push 3, and then they reverse aggressively, engulfing that 9:30 time, they may have just trapped volume after 9:30 and then reversed aggressively. Again, same picture, same chart from the last slide, except I've blown it up so that everybody can hopefully read. And also, if you have been following along and you haven't been able to read, the slideshow for this video is down in the description below. You can click on it, download it, print it out, do whatever you like with it. It is free, and I do that for all of my videos. So make sure you go back to all of my videos and print those out. So the breakdown of this 1 minute chart, as I've already talked about pretty extensively, the break of structure to the upside, creating this as a valid low, and then the break in structure to the downside, creating a lower low, and then having those big 3 pushes up. You can see the kind of the pause candle here now, and then leading us up into the high on that third push. Traders are buying at the worst possible place in the chart, and then it immediately engulfs that 3 push pattern. This is a common market trap. First entry short. This is the first hour high, so they might have volume actually trapped above that first hour high. The only 3 things that markets do is breakout trend, breakout reverse, or stay in a trading range. 1 hour candle, it's going to maybe be a failed breakout going back to the 50% of the range, or maybe even to the other side of that range. Everything from that last slide was mostly about pattern-based entries. Pattern-based entries is my minimum. Pattern-based entries is my minimum requirement for entering a trade, but that is not what gives me edge. My edge personally comes from reading and understanding other humans' behavior, understanding my own behavior, so that whenever the market takes advantage of other people, I know how other people are feeling in certain areas of the chart. And if both things are lining up, my entry criteria and the fact that human behavior is very important in trading in general, and I've picked up on both of those things, it gives me a lot of confidence in that trade. So this is a behavioral breakdown of the chart. We have from left to right, looking over here, big impulse candles leading us into the high. Marking off that second push and making sure that you're marking off that second and third push, so that way you can see, I don't want to see where, traders going back up into this box. And also this box will give you a good place to put your stop loss. The previous day's high up here being triggered after 9:30, a big indication right there, because they just triggered breakout orders into the market. Other time frame traders are now in, and then they reversed very aggressively at a certain time of day. The time of day is what is important to me. Anybody who traded the breakout, this is where their stop loss is going to be, and then this is going to be a profitable trade. Anybody who went long right here or traded this breakout of this little ascending triangle, or W, whatever you'd like to call it, double bottom, they are now probably at break even at this point, and this is where their stop loss would be. And then, like I said, this is a potential area for institutional selling. And this is where I'm looking to put my stop loss. In the pursuit of always trying to find better ways of presenting information, this is something that I've come up with to try and narrow down or break down my thought process. And we're actually going to start at the bottom of the pyramid. All right. This is going to be my process from start to finish. Down here at the base of the pyramid, this is the big picture, everything that we talked about earlier on in this video. Technical analysis, 15-minute chart, market structure, all of these things down here. Big picture, again, 15-minute chart, except this is day of. And then also I have my little picture notes up there in the top of this pyramid. I'm not going to go through this and read it to you all. However, it is there for you in that slideshow. Like I said, if you want to download it, it could give you a better way of understanding or listing out certain information that you can follow it a bit better. Trading around the 9:30 opening, or just trading in general, can be very stressful. But after this video, I am now confident that using this information, all of you will be able to go into your session with a better understanding of what to look for. Ladies and gentlemen, I really hope that you've enjoyed this video. If you have, do me a huge favor, leave a comment down in the comment section below. Like the video, subscribe to the channel if you have not already, and enjoy the rest of your day.